The cheaper car loan is not always the cheaper car loan. A floating rate can look better on day one, then quietly get more expensive while you are still driving the same car, making the same payment, and watching the car lose value. That is why this choice matters more than people think. It is not just about interest. It is about how much uncertainty you are willing to add to a purchase that is already expensive. And right now, that matters because average monthly payments are still high, with Experian reporting $767 for new cars and $537 for used cars in Q4 2025. First, the simple definition. A fixed car loan means your interest rate stays the same over the life of the loan, so your monthly payment stays predictable. A floating loan, also called a variable rate loan in many markets, can move up or down based on an index, often the prime rate. The Consumer Financial Protection Bureau is very direct on this. Variable rate financing can make your monthly payment go up, and the longer the loan term, the riskier that is for the borrower. The CFPB also notes that most auto loans are fixed rate, which tells you something important right away. For ordinary buyers, predictability usually wins. So which one is better? For most people, fixed is better, not because it is always mathematically cheaper, but because a car is a depreciating asset, and adding payment volatility on top of depreciation usually does not improve your financial life. If you take a floating rate loan tied to prime, you are effectively making a side bet on interest rates. And as of early April 2026, the bank prime rate was 6.75%. That means a floating loan is not some abstract concept. It is directly exposed to a benchmark that can move. Meanwhile, the average finance rate on new car loans at finance companies was 6.13% in December 2025. So fixed rates are not exactly sitting in some distant fantasy land. Here is the practical way to think about it. Fixed is usually the better choice if your budget is tight, if you are stretching the loan to 5 or 6 years, if you are buying used, or if you just do not want surprises. Floating only starts to make sense when three things are true at the same time. The starting rate is meaningfully lower, you expect to pay the loan off quickly or refinance soon, and your budget can handle the payment going higher without wrecking the rest of your month. For example, on a $35,000 loan over 60 months, the payment at 6.5% is roughly $685. At 5.5%, it is about $669. At 7.5%, it is about $701. That gap may not sound huge when you are signing papers at a dealership, but it feels different when insurance, fuel, and repairs are all hitting at once. There is also a misconception that fixed means you just accept whatever rate is offered. Do not do that. The CFPB says auto loan rates are negotiable, and dealer-arranged financing may not be the lowest rate you qualify for because dealers can mark up the lender's buy rate. The practical move is to get pre-approved or pre-qualified before you go in, compare multiple offers, and keep your rate shopping within a concentrated window. The CFPB says multiple credit checks for auto loan shopping generally count as one inquiry if they happen within about 14 to 45 days. So the real decision is not just fixed versus floating. It is fixed versus floating after you have actually shopped the market. If you are ever tempted by a floating offer, ask 3 blunt questions before saying yes. What index is this tied to? How often can it reset? And what would my payment look like if the rate went up by 2 percentage points? If the lender cannot answer clearly, or if the answer makes your budget feel tight, that is your answer. Go fixed. So floating or fixed car loan, which is better? For most everyday buyers, fixed is the better choice because it gives you certainty on a purchase that already comes with enough moving parts. Floating is only better when the discount is real, the payoff timeline is short, and your cash flow is strong enough to absorb a rate jump without stress, the best car loan is not the one that looks clever on paper. It is the one that still feels manageable on an ordinary Tuesday